Welcome back to Investing Talk Podcast.
Today we're looking at HIVE digital technologies.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For you, the learner, HIVE is, probably best known as a Bitcoin miner. One of the old guard, really.
Right. They've been in the space for a while.
But the story here is this massive strategic pivot they're in the middle of. They're moving from being just a crypto miner to what they're calling a dual-engine growth strategy.
A dual engine. So what does that mean exactly?
It means they're integrating high-performance computing,
Well,
specifically for AI, right into their core business. The fascinating move to, de-risk from just being tied to crypto prices.
and if we look at the numbers, that engine seems to be firing on all cylinders. I mean, the recent results from Q2 fiscal 2026 were, frankly, staggering. Record revenue of $87.3 million. That's a 285% year-over-year increase from $22.6 million.
A huge jump. But you really have to peel that back a layer.
Okay, so break it down for me.
Well, when you look at that 87 million, the vast majority, about 82 million, that's still from Bitcoin mining.
Right, so the old engine is still doing the heavy lifting.
For now, yes. The new engine, the HPC and AI side, that brought in about 5 million.
5 million doesn't sound like a lot next to 82.
It doesn't, but you have to look at the trajectory, the momentum. Their total HPC revenue for all of fiscal 2025 was around 10 million, which was itself a 3 times increase. So they are proving that this new engine is not just viable, it's scaling really, really fast.
That makes sense. It's a story about where they're going, not just where they are. And the efficiency across the board seems to be a huge part of this. They reported a Q2 gross operating margin of 49%.
Almost 50%. That's 42.4 million gross profit.
And the adjusted EBITDA, which is, a key measure of cash flow, that hit $31.5 million. When you're pushing those kinds of margins in a capital-heavy business like this, it just screams that they're managing their costs incredibly well.
The operational performance is, it's stellar. You have to give them that. But this is where we have to put on the skeptical hat for a moment.
Okay, what's the catch?
Despite that huge EBITDA, HIVE still reported a net loss of $15.8 million for the quarter.
Wait, okay, so how does that happen? How do you have $31 million in operational profit, but a nearly $16 million loss on the bottom line?
It's all about something called non-cash loss. And for you, it's really crucial to understand this. They're buying tons of expensive hardware, right? GPUs, miners.
Right.
Accounting rules say you have to expense the cost of that equipment over time. It's called depreciation. It's not actual cash leaving the company that quarter. It's an accounting charge for wear and tear.
So that $15.8 million loss isn't a reflection of poor cash generation. It's more of a bookkeeping thing tied to their massive expansion.
Exactly. And they are clearly expecting that expansion to pay off because their guidance is, it's incredibly ambitious.
Yeah, I saw that. They're targeting $750 million in combined annual recurring revenue by the end of 2026.
And that breaks down into $550 million from mining and a very aggressive $225 million from HPC and AI.
So let's talk about that. How realistic is a jump from $5 million in a quarter to an annual run rate of $225 million by 2026? That's the whole ballgame, isn't it?
It is. That's the entire investment thesis. And to get there, you need a serious competitive advantage, a moat.
Which takes us to their power source, their secret sauce.
Precisely. Their edge is all about access to low-cost renewable energy. The big one is their Paraguay hydro assets. They've got 300 megawatts deployed there.
And hydropower is not just cheap, it's stable, it's consistent.
And that fixed, low-cost power is the foundation for what they call their sustainable growth flywheel.
Okay, let's drill into that flywheel. The number that really made me sit up was the claim of 80% operating margins on their HPC business. 80%. How is that even possible?
It's the electricity. For AI computing, power can be up to 60% of your total operating cost. It's the single biggest expense.
So if HIVE can get their power for a fraction of what competitors pay,
that difference drops straight to the bottom line as pure margin. They are essentially arbitraging cheap green power against the insane global demand for AI compute. That 80% margin shows they're changing the basic economics of the business.
That is a structural advantage. It's not just about being a better operator. It's about having a fundamentally cheaper input. So what about the scale? Are they deploying the hardware to match these ambitions?
Oh, they're scaling aggressively.
Well,
On the Bitcoin side, they're pushing towards 25 exahash per second. That's almost a four-fold increase from where they were.
a huge ramp up.
And on the AI side, their BUZZ HPC division has already installed over 5,000 high-end GPUs.
And how are they paying for all this? They must be taking on a lot of debt.
Well, that's the other interesting part. They aren't. They have a really strong balance sheet with digital assets worth over $180 million, including over 2,200 Bitcoin.
So they can self-fund, they can sell some of their crypto holdings to pay for new GPUs and infrastructure in Paraguay.
Exactly. It lets them avoid taking on heavy debt or constantly issuing new stock, which is a huge risk for shareholders. It's a cushion.
Okay, so the fundamentals look solid, the strategy is compelling. How is the market reacting to all this? Let's talk about the technicals.
The immediate reaction to the earnings was very positive, a 7.58% surge right after pushing the stock up towards $5.
And technically, it's looking constructive. The stock's been forming higher lows, which is usually a sign of accumulation. And traders are getting excited about a potential golden cross forming. That's when the 50-day moving average crosses above the 200-day. It's often seen as a signal for a longer-term uptrend.
And it's not just retail traders. Institutional ownership has risen to over 24%. The smart money is clearly taking notice of this transformation.
So what are the analysts saying?
The sentiment is predominantly bullish. The headlines are all about the efficiency, the dual engine story, the strong Bitcoin production numbers, like 290 BTC in a month. They see a company that's actually executing.
And that's leading to some pretty optimistic price targets. I've seen the high-end consensus cited around $8.13.
Which implies there's still a lot of upside if they can deliver on that guidance. The market believes, but it's not pricing in perfect execution just yet.
So what are the near-term catalysts we should be watching for? What's going to unlock that value?
The big one is the Q3 earnings release. That's probably late February or early March 2026. All eyes will be on one thing.
The HPC revenue number?
Exactly. They need to show that continued acceleration towards that 225 million ARR target. We'll also be looking for updates on the Paraguay expansion and maybe more details on their BUZZ HPC division.
And you can't ignore the macro environment either.
Not at all. You have two huge potential tailwinds. A sustained Bitcoin recovery, maybe to that $100,000 level some are predicting, would be massive for their mining revenue.
And on the other side, you have the massive demand for AI data centers, especially green ones, that plays right into their hand.
It's the perfect storm for them if they can navigate it.
Okay, but every story has risks. Let's do a risk check. What are the top two things that could derail this?
Risk number one is that profitability volatility we talked about. That $16 million net loss, even if it's non-cash, shows that if Bitcoin slumps or costs rise, they could face pressure. And if cash flow slows, they might have to issue new shares, which could dilute existing shareholders.
Makes sense. What's number two?
It's the continued dependence on the Bitcoin cycle. The AI engine is growing, but mining is still the bulk of the business. We saw the stock dip recently, even with good news, just because Bitcoin pulled back. They're still heavily tied to that crypto volatility.
But the bullish case says the mitigants are strong enough.
That's the idea. Those high 49% margins on mining give them a big cushion. And the commitment to AI diversification, if they execute, creates a path to stability that most other miners just don't have.
So if I had to give you the elevator pitch, it's this. HIVE's explosive growth is being towered by a super efficient dual Bitcoin and AI engine. The whole system works because it's fueled by cheap, renewable energy that they own, and they're aiming for a massive $750 million revenue target by 2026.
And this means your investment horizon has to be patient. It's not a quick trade. It's a multi-year hold, waiting to see if they can hit those huge 2026 milestones. If they do, it fundamentally changes the company.
Which leaves you with one final thought.
They've shown they have the infrastructure and the early momentum.
Yeah.
But that $750 million target is a massive test. The real question is, can they execute on that aggressive plan while holding on to those critical 80% HPC margins? The whole flywheel depends on it.
If you enjoyed this analysis, make sure you hit that subscribe button.